Let's talk.
Charles Brown.
It's the time of the week now where we are joined, or time of the every 4 weeks or so, we are joined by our friends from Spence, Clarke. This week we're looking at the reform of social security contributions for the self-employed. If you've got a question that you want to put to our panel of experts, yes, indeed, that means you two, then these are the numbers.
To contact TRE, please call 952 78 4000. Email studio@tre.radio. Send us a WhatsApp on +34 645 99 67 95. Message us on Facebook, Talk Radio Europe Official, or tweet us at TRE Talk Radio.
So, if you are self-employed in Spain, you've probably heard by now that the way you pay into social security in Spain has changed since January 2023. A new system is in place, and this affects how much you contribute, how it's calculated, and even how it might change over time. It's a big shift, and that one is that's being rolled out in stages. So, to help us unpack what's going on and to lead us gently by the hand through the ever-changing world of the Spanish tax system, once again, we have the two of our friends from Spence, Clarke. We're joined by Rob. Good morning, Rob.
Good morning, Giles. How are you?
I'm very well, thank you. Second time on this show.
I know.
And, ladies and gentlemen, drum roll, because Christina joins us for the first time. Good morning, Christina.
Hi, nice to meet you.
So, tell us about that. So, thanks for being with us today. So, this is a major change, isn't it?
Yeah, I mean, it's one of the biggest for self-employed workers in Spain in recent memory. The idea is that social security contributions are going to be more tied closely to what people actually earn.
Right.
Until recently, autonomos had a certain freedom to choose their own contribution base.
Right.
This often resulted in them opting for the minimum that they were comfortable with paying, so as to reduce their monthly costs.
Yeah.
But like all systems that rely too heavily on self-assessment, there is a flaw within that system.
Because you're going to always sort of mark yourself down as human nature.
Some people will, but I mean, the fundamental at the end of the day is it doesn't always reflect reality. Many people were contributing far less than their income would justify, which meant lower benefits down the road, especially in terms of pensions. The reform that started in 2023 is part of a long-term plan. Instead of one-size-fits-all contributions, we now have a model where income brackets determine what you pay. The ultimate goal is fairness and sustainability. Those who earn more contribute more, and those who earn less shoulder less of the burden. Okay,
so let's have a recap about who this exactly is going to apply to.
Well, this applies to anyone registered under Spence Inc.'s RETA system, the Régimen Especial de Trabajadores Autónomos.
Yeah.
That includes freelance, sole traders, and also directors of companies who are active in their business operation. It doesn't affect salary employees, and it doesn't apply to public employees or other non-autonomous categories. Yeah. So, if you are self-employed and you pay your own social security each month, sorry, but you are part of this reform.
Okay, just a quick question on that point, if I may. When you say directors of companies who are active in their business operations, does that mean you are if your own company, you're in there
if you are a recognised director of your company, and usually that would be in the constitution of your deed for your company. It identifies who are the directors.
Yes.
And those who are the directors will be required to pay social security.
Right. Fine. Super. Now, this is. I just wanted to. I just wanted to make that clear. This is a long-term change. So this isn't happening in one hit. Strangely enough, for Spain, they're actually going to roll this one out. Okay.
Yeah, I mean, there's a phrase that comes from way back in the 70s and maybe even earlier in the US. It's called sticker shock.
Sticker shock?
Yeah, you may have heard of it.
No, I haven't heard this. This is good. Go on. What's sticker shock?
Sticker shock came from the old car sales industry.
Yeah.
So it would be, you go to a car showroom and there'd be a big sticker on the windscreen. It says, this car is this amount of money.
Yeah.
And you think, I'm going to buy that car. You go inside and they add everything up and they come up with, this is the real number. And so there's a big difference between what you thought it was going to be and what it actually turned out to be. And so in a way to avoid this kind of shock to the system, and partly it's because the Social Security are still a little bit unsure about where the levels should be. They don't want to do everything in one hit.
Right.
So they want to actually ease people into the changes that are going to happen. So it's going to be rolled out until 2032 in the form of a transitional framework.
Right.
Each year, income brackets and contribution rates are going to be adjusted with the aim of reaching a stable system over the next decade.
Right.
This gives both the administration and workers time to adapt and allow for corrections along the way. So no sticker shock.
Right, okay.
What's important is that every year your income will be reviewed. Once you have submitted your income tax return, Social Security will compare what you have declared to what you have paid in contributions throughout the year. Based on that, they will issue an adjustment. Either a request to pay the shortfall or in some cases a refund if you've paid too much.
Yeah, that's lovely when you hear the words refund if you've paid too much. However, if somebody has, which may be more likely, has underpaid, maybe because their income was higher than expected, will they need to make up the difference?
Exactly. They will receive a formal notice, usually after the tax season, explaining the shortfall and providing a deadline to make the payment. If it's settled within that period, there is no penalty. But like with most things in public administration, if you ignore it or if you pay late, interest and surcharges can quicken and eventually enforcement measures.
Yeah, so yeah, if you, yes, they like a penalty, don't they? Let's face it, we like a penalty and then you got surcharges and then...
The only time you don't like a penalty is in football.
Well, exactly. And for those of us who have had their accounts embargoed, it's always on a Friday afternoon just before a puente, and that is the whole weekend gone, and then it'll be Real Madrid, the Clasico or whatever. So, but what if you actually? I mean, what if? And I know, as being a Tono in Spain, it's a very low, But if you actually overpay because you thought you'd earn more than you actually did.
Well, this is where the system becomes a bit complex.
Okay.
And frankly, where some frustration can arise. If you have overpaid but your contribution stayed within the legal limits for your brackets, then yes, a refund will usually be issued. But the refund isn't always that quick.
Right.
And it might take several months. However, and this is very important, there is a legal maximum contribution base. So if you paid above what your income brackets allow, even voluntary, that extra amount doesn't count toward your future benefits. In other words, it's not kept on record to improve your pension or protection. It's just refunded because there is no legal basis for the system to retain it.
So you can't front load, if you like.
No.
Okay, all right. So just to clarify, if you paid more than your bracket allows, Social Security won't apply that to your pension and healthcare retirements.
Correct.
Okay.
The system has ceilings. Let's say you overestimate your income and place yourself in a high bracket, which is then confirmed to Social Security. This is what I think I'm going to earn this year.
Right.
If your actual income at the end of the year ends up lower, you would have paid more than legally necessary. The difference is refunded, but it doesn't boost your future entitlements. This means you can't simply top up your benefits by paying more than required.
Right.
It's one of the way the system keeps things standardized, manageable, but it does catch some people by surprise.
So, but they would return this several months later. Would they return this automatically?
Well,
then, or
once you've had the income tax done and the assessment is done that says, okay, this is your income.
Yeah.
This is what you paid. This is what your Social Security contribution said you were going to earn.
Yeah.
Income tax says this is what you did earn.
Yeah.
They will then do the assessment and they will see, okay, you've earned less or you've earned more, and the system applies to you.
So I suppose the main thing is it's very important to estimate your income carefully.
Absolutely.
Yeah.
To be fair, the system does recognise that predicting the income can be difficult, especially for freelancers, the self-employed, whose earnings can fluctuate during the year. That's why they've built in flexibility. You can revise your estimated income and adjust your contribution base up to 6 times a year. This allows you to stay in line with your actual financial reality. avoiding the adjustments of at the end of the year.
Yeah. But what about, those brave souls who've decided that they want to strike out at the end? Let's welcome the new. Do we call them the nuevos autónomos? I mean, those just starting out. They're thinking, that's it. I'm going to be a freelance dishwasher upper or whatever. I mean, will they still benefit from the Tarifa plan? I mean, I remember at one point they were saying you could get a small, you could get a discount for the first 6 months. And which my then accountant didn't tell me about until the 6 months had passed. Thanks, because it was, Okay, and there's we could have done that. We could have done that 2 years ago. It would have saved you X amount. Anyway, let's not go there. So there is a Tarifa plan. There's still a Tarifa plan.
Yes.
It doesn't mean going to Tarifa and just forgetting about becoming an autonomo. That's Claudia's idea, because Claudia loves Tarifa.
No, that's Tarifa Playa.
Tarifa Playa,
Yeah.
as opposed to Tarifa plan. Okay, very yes, right. So the Tarifa plan.
Yes, the Tarifa plan, or the flat rate reduced contribution, still exists for those new self-employee workers, typically in the first year.
Yeah.
It is designed to ease people into the system by lowering initial cost. Even this is now suggested to review. When you file your first time return, if you turns out that your income was substantially above the threshold, you might be required to make balancing payment. So it is important to keep good records and monitor your earnings closely, even when you are benefiting from that initial discount.
So if you, for example, go in as, let's just take as we're in Andalusia, if you go as a freelance property consultant, which you could presumably could be a freelance property consultant, and within the first, it takes off spectacularly. You are bringing in, 10,000, 20,000 a month in commissions because you're advising some high-end clients. And could the Tarifa plan go, that doesn't really work for you because you obviously are earning above the, is that what we're saying here?
Well, what they will do at the end of that first year, because they don't know anything until they've done your first income tax return assessment. Yeah. And it's at that point they'll say, well, yes, you were on a Tarifa planner. Yeah. That's now finished. Yeah. You moved on to what we call the minimum standard amount in your second year. And now we've done this assessment and we think you need to pay more. And so it's important to keep on top of it, to understand where you are earning and what your brackets are.
Now, talking about brackets, and this is where the fun. This is like the Champions League table of brackets. So, explain to me about. Just what? Presumably just one or two brackets, yeah?
No, there's 15.
15.
Yeah.
Okay.
It's not a low, medium, or high bracket system. It's not that simple.
Okay. All right.
No.
All right. Okay. 15.
15.
Okay.
And each has a minimum and a maximum contribution base. This fundamentally forms the bracket within the bracket. This is your minimum, this is your maximum.
You have to speak slowly now, Rock. You're talking to me here.
Yeah.
Failed maths at O-level twice, so let's go.
These ranges dictate what you can contribute depending on your income. Yeah. For example, someone earning under 670 euros a month is the lowest bracket. And someone who's earning over 6,000 euros a month is the highest bracket. Right. These brackets are reviewed annually, and over time the contributions will be fine-tuned as we approach 2032. Right. The idea is to try and find the right balance between high earners, low earners, those in the middle, to try and reach an accommodation that's fair for everybody. It's worth noting that even if you would like to contribute more, like we've mentioned, to boost your future pension, for example, you cannot go beyond the maximum base assigned to your income level. That's where the idea of fairness and standardization comes in. You cannot buy a higher pension through excessive contributions unless the law explicitly offers that provision. To give you an example, it could be that, say, for instance, this is your earnings per month. There's a minimum amount you have to contribute. Yeah. But there's also a maximum amount you can contribute up to increase your benefits, but within that bracket. So an example would be, say for instance, your contribution says it's 200 euros a month. Yeah. But there may be a maximum of 270 euros a month. Yeah. And you can pay any amount within those two brackets.
Okay,
At your earnings level.
Yeah.
If you pay $300 a month, then at the end of the year, when they do the reevaluation, they'll say you've paid over the maximum contribution, and that will be the bit that's refunded.
Right. Yeah. I mean, do we have any guesstimates at the moment about what these? No. Because I mean, just to go off for a minute, I mean, there were rumours of saying, it's going to be 500 for autonomos, and it's going to be, it's depending, and it was going to go up to 600, and then people were saying, because people.
From what we've seen over the last year, I think the first fundamental change that happened was actually this January.
Yeah.
And what we noticed was that the people on the lower benefits had a very small increase.
Yeah.
And those on the highest level had the biggest increase, and those in the middle hardly moved at all.
Right.
So I think it was a way of just trying to rebalance the system. And at the end of the day, they'll work out what they need to earn in revenue and how they want to balance it for all the different brackets.
Fair enough. What happens if you disagree with your adjustment or you think there's an error?
Spain, you can appeal.
Is there an app? Spain is an app. Appeal, yeah. So,
I mean, Social Security allows for a formal review process.
Yeah.
You will need to submit the relevant documentation, usually tax records or bookkeeping data, to support your case. But timing is crucial. There's a limited window to challenge these adjustments, so staying on top of your mail and deadlines is important. Mm-hmm. What can I say? Procrastination is not your friend.
T-shirt. I'll tell you, with Christmas coming up, then we're going to have fresh crackers. This is going to be the T-shirts.
Yeah. So this is one area where working with a gestor or a tax advisor can really pay off.
Right. Sounds like there's an awful lot more room, as always, for error. As we said, this is where you take us by the hand through the system. I mean, would you say that the role of having an advisor, it's going to be even more important than it was previously?
Well, that's a fair point. The system has become more technical. So knowing your income is no longer enough. You need to know how to interpret it within the frameworks of these brackets and legal desk rule. A good advisor can help you to optimize your contribution, avoid pitfalls, and manage appeals or adjustment. For many autonomous, this kind of guidance pays for itself in avoid mistakes.
Because the thing is, I suppose, if you overpay or whatever, and you're waiting for that money to come back as an autonomo, that is money that you probably need.
It affects your cash flow.
Yeah.
If your margins are tight, then paying more than you need to, it's not justified.
Yeah.
Just from a business point of view. So, keep it on top of it, making sure that you are at least close to where you think you should be.
I mean, one of the things is, I suppose, is it's the whole. There's a Blue Oyster Cult song called "Don't Fear the Reaper," mm-hmm. right? And it's like, don't fear Hacienda, because if you, I know it's a great song, yeah. It's all right. We'll explain. We're a little, it's all right. Christina's looking at us like, 1976, 1977, when we were small children at that point, obviously, and
when we wore shorts. Oh yeah, Spain. We still do.
The worst for shorts, indeed, but. You don't fear the Hacienda, and the good thing about this is it really puts the emphasis on you to say to get involved, to be proactive, to get involved, not to go, we'll deal with that later, because if you deal with it as it's coming along with advisors, it's an awful lot easier than at the end when you open up that box and it goes and it scares the living proverbial out of you.
There's a level of control here.
Yeah.
At the end of the day, you have a level of control. And that's what's important.
Well, I mean, thanks. I mean, and obviously the other one thing, I suppose the other thing, it's not just paying what you owe, it's about making, as the American say, putting an investment in your future.
Yeah, but I mean, people also forget that Social Security also pays for your health benefits.
Yeah.
So, that's kind of an important thing for you just living in Spain, that it covers your health benefits.
Yeah, amongst so many other things. Well, once again, you've managed to lead us gently by the hands through the Spanish tax system. If people want to get in touch with you at Spence Clarke, presumably the best thing is to go via the website.
Yeah, go on the website www.spenceclarke.com.
Well, once again, it's been great for you to join us. Rob, thank you for popping in.
Thank you for having me.
And Christina, well done first time.
Thank you very much.
Right, that's Rob and Christina from Spence Clarke.